The Zacks Rank, value, momentum, growth, and income all factor into Zacks Rank buys.
Petroleum and rail cars, that's what we're talking about in this edition of Value Stock Zacks Rank buys with our value stock strategist, Tracey Ryniec. And you managed to find a couple of more, huh?
I have, yeah.
Even though it is earnings season.
It is, so that makes it difficult, and then it's also difficult just finding value still. It's still difficult.
Well, let's talk about the first one, Marathon Petroleum, MPC, the ticker. They're a refiner. They've been around for a while.
Yes. A lot of people know the Marathon name. This part of Marathon was actually spun off in 2011, so it's been 4 years on their own as a refinery. They own 6 refineries, a little bit of pipeline, but one of their key areas is the Speedway gas stations.
Oh.
And they just added more to that by buying out Hess's stations, so now they have quite a big collection of the gas stations. And not only, you know, gas prices have come down, but with more money in the pocket, people are spending in the stores. So the Speedway part of their business actually in the fourth quarter of last year had a record quarter. So you're starting to see some good things with the refiners. I've talked about them a couple of times. This one is a Zacks Rank #1. You can see the estimates really jumping up here because after the fourth quarter, they had a big beat. All the analysts believe this year is going to be real bullish, 20% earnings growth. The margins were far better than what they thought. And the thing with the refiners is that as crude prices come down, the refineries do better. Their margins increase. So this is actually really good conditions for them. So you can see it in the earnings estimates here. Still cheap, trading around 9.5 times, even though the shares have spiked off of that big beat last quarter. But, you know, the refineries can trade up to, you know, 11, 12 times historically and not been too expensive. They do go through these cycles. If crude were to, you know, rebound considerably, that's going to impact their crack spreads. It's going to impact earnings. But for now, the story is good. And like I said, they have the retail component from their gasoline stations. I like that aspect of it, that they have multiple good things going on right now.
So just to clarify for me and maybe some others who might be watching, 20% earnings growth is a big number.
Yeah.
But is it totally hinged on what's going on with oil?
For the most part, yes.
Okay,
but
so were it not for that oil story, that growth might not be as big.
That's right. That's why the refineries aren't consistent earnings growth winners in that game. And you can see for next year in the chart that I had, the earnings have contracted back because they're unsure on 2016. No one knows what the crude prices are going to be or the crack spreads.
Right.
So the analysts are always very conservative with the refiners, like heading out a year. Even quarter to quarter, that can all be variable, but for sure for a year out, they will be more conservative. You can see those earnings contracting a little bit for next year so far.
Okay. Greenbrier Companies, GBX, they make, repair, and sell rail cars and barges.
Yes.
Now,
we've talked about these guys a couple of times recently because they have been a value for a while, but they just reported earnings for their second quarter. So they're an early reporter. So now we can have some more guidance as to what's going on with them. You know, the story's still good on the rail cars. I keep covering them because they are still values, but these stocks really, this one and its competitor Trinity Industries, both really got pulled back on the energy crisis or whatever you want to call it. As the prices plunged, people thought nobody will be buying the tank car type of rail cars that transports crude and chemicals. And so everybody panicked and sold off the shares. They became extremely cheap, but the panic has been unwarranted because the other aspect of their business and the freight car is really increasing as the economy gets better. Greenbrier, another good quarter, record backlog, $4.78 billion in the backlog now. They said for this year, the orders that are coming in, about 80% were non-energy related. That's what you want to see because before it was almost the complete opposite. It was mainly the tank cars coming in. Now people are ordering the intermodal, the car carriers, you know, all these other types of cars. You can see the earnings estimates going up here because Greenbrier did raise guidance for the year. Analysts very bullish, raising towards the upper end of that guidance range here. You know, interesting thing about them also is that the regulations are going to change. Hopefully in May, we're finally going to get the regulations coming down. They were supposed to be in December, but they've been delayed. And that will also put a little boost under the tank car area, because it's going to be regulations to make the tank cars safer.
Okay.
People will have to order new ones or rehab their old ones. Greenbrier will benefit from both of those things, so that will give them some more orders.
But with regard to orders, you say there is a fly in the ointment.
There is, because so far the orders have been coming in much more aggressive than everybody anticipated. They've been beating the analyst estimates every quarter, and that's a good thing. It's going into the backlog. That's why you see the record backlog, but they only had 1,000 orders as of March for this quarter, and the analysts are estimating about 4,500 total rail car orders. Of course, the quarter's not over. Everything goes, you don't know when you're going to get the orders in, but it gave a few of the analysts a little bit of pause that this quarter might be a little bit weaker. But again, because of the regulations changing in May, a lot of new orders are going to come in off of that. So they do believe even if this quarter is a little weaker, it'll rebound. You can see the shares here, huge sell-off in late 2014 when everyone was panicking over the tank cars and the energy area. And then it's rebounded a bit, still really cheap. It's trading under 10 times or around 10 times. These guys historically can go up to 15 times or so in their cycle. They did say on the conference call that they're not seeing any slowdown in terms of the end of that cycle coming, which everybody's fearing is going to happen, because eventually you just don't need to order as many tank cars or freight cars.
Yep.
But right now they're not really seeing that, and we can see out several years of their orders. So Greenbrier is still a good value stock here. I own it personally, and then I own it in the value investor portfolio as well.
Okay, well, I didn't have to ask you that,
No.
because you told me.
Yep.
All right, thanks. In the meantime, if you are in syndication land watching this video and you're not at the Zacks.com website, you can always go there to watch other stock videos, but more importantly, there's other stock information that is in text form that you can access off the homepage as well. Stock picks, stock picking strategies, and stock commentary for that matter. Again, access it right off the homepage at Zacks.com. With Tracey, I'm Terry Ruffalo.